So, in this session, we want to explain which BOS, break of structure, should not be traded. For example, in the financial market, you might potentially see a distinct bearish RBR, which stands for rally-base rally, formation in the sell direction, which we typically and commonly label as a significant break of structure. This particular pattern often indicates a strong shift in market sentiment. These BOS that exist are normally identified with the help of the pivots box tool. They give you a zone around here where you have a sell outlook from this zone. But sometimes you see that this doesn't happen, and even though a sell should occur from here, it doesn't. First, the market reaches this zone, gives a slight reaction, passes through the zone, and then the sell happens. Our discussion is about which of these BOS are the ones that we should avoid trading in these break of structures. Number 1. Firstly, now we need to analyze. Let's see if a BOS has happened in this way. Is it within the specific time frame we genuinely intend to actively trade? For example, let's suppose I clearly see this particular pattern on the M15-minute time frame. Is it truly indeed within the M15 range approximately of its leg? Meaningful from this point onward. To this point, from the range that I have marked, let me change its color. Within this range, is it within the range that I'm drawing in its first leg? Was there liquidity that has been taken out? Has it swept these liquidities? In other words, is there a BOS? For example, if I'm trading on the M15 time frame, if I'm on M15, the first condition is whether I see such a structure in leg A or not. That is, the very first thing that should matter to you is the same range that I've drawn here. This range that you see right now, it's exactly this range. If I draw this on one level, it's pretty much on one level. Is there an imbalance in this range in leg A or not? Is there a trick or not? Is there a trick here or not? If there is a trick, then this could be a good option. If there isn't, it's not a good option. Condition 1 is the existence of a trick. Condition 1 is the existence of a trick. Condition number 2. Is it that up to this time frame where the trick is visible, for example, suppose it's not visible in M15, but it is in M5. Condition number 2 is that if it's visible in M5. Did this point lead to a BOS? Did the main body of the candle actually break this incredibly low down? Or with the shadow? So condition number 2 is that it absolutely must be broken with the body. That is, for example, if at this point there is a candle, let's say this is my trick and this is my low, generally speaking, there is a candle at this point. Now I either have a bullish candle or a bearish candle. In this area, for example, let's say this is my last bearish candle. This is its shadow, that's the candle, and this is the zone you have. Do you see it here? You need to see whether the entry candle has come and broken this area and caused the BOS, meaning this is the zone that caused the BOS. You need to check it in this shadow zone that has been broken and created the BOS. Is it here with, for example, a candle? Is it with the candle's close or not? If you have a break here with the candle's close, then that's the second condition. So here you need to, should the break be by the close? Yes, meaning the close must definitely have happened below this. Now, if it has these two conditions, only if it has these two conditions do we say that probably the BOS exists here. It's a candidate to be checked for taking a sell or buy, so there were two conditions. Condition 1, trick. Condition 2, close by body, not shadow. So here it shouldn't be the shadow, it should be the body. And the condition of confirmation comes from the definition of EPA and IPA, and from the definition of protected and unprotected. Let's add 2 points to conditions 1 and 2, and that's when you're in the market. For example, if the BOS that has formed here, compared to its previous wave, compared to its previous BOS, compared to its previous node, always check whether the area that is 150% of the previous wave has reached this point or not. If it hasn't reached, most likely this can still be liquidity. So we always check whether it has become efficient or not, whether it has reached this zone or not. In some definitions, they don't consider the 50% in this way. In some specific definitions, they often say, for example, if this particular point is indeed the absolute lowest wave, they typically take the 50% mark from this entire designated area. Well, they say this has become efficient, whereas we say if the node hasn't reached the previous 50% level, meaning this area, if it hasn't reached the previous 50%, then it hasn't. For us, this is considered unprotected. So, the third condition is that it must have definitely reached the 50% of the previous node. Alright, these are the 3 conditions. We usually check to make sure it has reached the 50%. Now, what is the definition of efficient price action when you have 2 nodes, the first and the second, and they are far apart or not intertwined with each other? If they are independent and separate, we call this efficient price action. In this particular situation, we absolutely shouldn't consider trading, but if we carefully check and thoroughly observe such a specific situation, then we might reconsider. Where they are actually within the same range, usually a counter trend also forms in this area. In that case, here we have inefficient price action. Is it necessarily so? The 50% level is important. In this situation, we call it IPA. We call this situation inefficient price action. We call it IPA. The 50% condition isn't necessarily important, but IPA is important. IPA matters to us. However, it's better if, in addition to being IPA, it also reaches this zone. Alright, let's go and review a few cases. Let me show you on the chart so you can see which node belongs to which time frame. For example, let's say I want to look at gold. I want to analyze this zone. I want to check this zone and see what they say about it. For example, I can look at it from this perspective. Let's say this is a bullish RVR and this one is a bullish RBR. Now, I'll let the market move forward a bit more. Let's assume this has formed a bullish RBR. The market is moving. I just want to look ahead so I can also see what happens in the next time frames. Let's assume we have this at our disposal. On the 15-minute chart, I want to mark this leg. By this leg, I mean this specific move. I'm going to check this move. If you look at it on the lower time frame, you'll see the liquidity zones. There's a lot of liquidity that later gets absorbed by the leg, and then the market moves again. Let's go to the 1 hour time frame. Again, I can see the liquidity zones here in this area. I'm seeing it in this area, this specific area. By this, I mean from this blue line up to the high of the next legs, not those, just this very first leg right here. We can see that there's liquidity present. On the 4-hour time frame, again, I see there's liquidity, and this is the liquidity I expect to be hunted. We mark liquidity with the symbol. We can show it with the $sign or with an X symbol, which indicates inducement. Now, since this has happened here, for now, one condition is met. Let's see if the close condition is also met or not. As you can see, this high was closed with a shadow, so for now, this shadow is a sign for us that it hasn't broken with a close. But if the next candle forms and it also has a shadow, you can transfer the shadow to this one, and finally the break has happened here. So even though you draw the break of structure at this level, the confirmation of the break of structure was confirmed here. Alright, so here, My BOS was confirmed here, meaning in this area, the BOS has been confirmed. So now, all the current conditions have been met. Now, is there also an APA? Down here, I don't see another node that would be a second node format, where this one would be sitting inside that node. Unless you don't actually see it within that specific time frame and truly want to change the current time frame, shall we proceed? Let's carefully solve another example now. Look at this. This is a node. As you can see from here, how is it actually drawn? Up to the point where I'm seeing it, this candle was below, it hit a candle, but here I didn't have any close at all. And after this close, another one formed, which is this one. That's how it is. The second BOS, let me draw this with their color in green. The previous one was also green, I'm seeing the BOS itself. Okay, now if I want to check in one of them, in the drive, in its leg, again, I'm seeing the liquidity and I'm also seeing the candle close. This one is also a candle close. So here, at first it didn't close, but later it got confirmed here. So now this is a BOS that has also become efficient itself. See, this has become efficient in this situation. We have efficient price action, and this is the second one. Now I want to move on to the next one. For example, let's look at this. Now pay attention. This node compared to the lower node, these two in relation to each other, meaning this node and this node right now, these are efficient according to the bar. For example, when you see something efficient like this, don't look for POIs, order blocks, or other things inside it anymore. So what do we do now? We stay, and with your help, you can very easily draw a wave from here. Say that this hasn't reached 50%, and by the way, even the 50% level itself was a suitable spot that it didn't reach. But anyway, we just want to understand if it was an IP zone. For example, I shouldn't trade this, nor should I try to extract a zone from it and get stopped out. So in our analysis, anywhere on the chart that you want to trade, let's say, for example, we want this node. Now, if we want to trade this node. If I want to analyze this node, first, I compare it to the previous node. That is, I find the previous node and say, have these two now come together? Honestly, I wouldn't trade this. This area isn't tradable. This needs to be filtered out. I look for my final setup in all parts of the market, so pay attention to this. The next point, which is very important and we need to pay close attention to, sometimes you don't realize that, for example, the market is in this zone and you come in. You find a BOS, there's also an FVG, and you even find a supply for it. For example, this supply tells you to sell, so again you come and take a sell here. The price dramatically drops, and now it consequently creates another significant supply zone for you. You then find it, let's say, for instance, it's precisely located here, and you subsequently take another profitable sell trade. Again, the market comes here, you spot it, and you sell again. But pay close attention. You expect it to sell off, but if you look at the lower price, you'll see that the price has come down and broken this area. So now you're in a larger BOS, break of structure, and something is about to happen. In fact, the cycle is changing here. The market cycle is shifting, and now you've reached a bigger pivot point. Now, if you trade this zone, you'll definitely get stopped out, and this zone shouldn't be traded. Why? Because here, as we said, the cycle has changed and now you have a larger BOS, and this larger BOS is for you trading. If you validate this zone here, can it be valid? No. Now this has become just an internal level, whereas you need to look at the bigger level. For example, as long as, that is, whenever you are taking a trade, on the USA, you must make sure that a certain event hasn't happened. For example, I'll go to a lower time frame and show you. For example, let's go to a part of the market where a clear event has happened so I can show you myself. For example, you can clearly notice right here, in this specific instance, you had an RBR, and for instance, by effectively utilizing the POI, you can readily find the crucial relationship that exists. Here again, did you have another RBR? Now, are you paying close attention to this move? When the market is here, that is, you are exactly at this point. If it had reversed from here, you would have had to find the next RBR level, which would have been here, for example. But when this happens, it means that here, right now, it's broken. That's it. I shouldn't consider this as an RBR. This becomes the main RBR. And this one is internal. This one is internal. And from my perspective, it would be something like in these zones or a hunt. Depending on whether these zones have been tapped or not, I need to complete my perspective. So one of the really important things is when the cycle changes. In the market, you need to pay attention. If you are at a level where your level is responding internally, when a bigger low breaks a bigger time frame, do you no longer trade these? These now serve as liquidity for you, and this also becomes liquidity. Ultimately, you need to identify, using the tools we have like POI, whether this is a valid zone here. For example, suppose the diagram is like this, and this one has either reached 50% or hasn't. For example, suppose it hasn't reached 50% here. I'm assuming it hasn't reached it. In this case, what happens is, first of all, the valid POI here is this one. This is your valid POI. In this situation, you've entered a larger cycle from which you intend to continue the move. And the next topic is about change of character. When were you looking for a change of character in the market? Remember this. Whenever you reach what seems like a change of character, don't immediately consider it as such. Why? Because it might actually be a liquidity level itself. For example, suppose the area below 50% hasn't been consumed yet. In this case, you interpret it as a change of character, but this change of character fails. That means here you have a failed change of character, or FCH, right? Why is this happening? Because this particular level might indeed work effectively for me, and consequently, this specific point then becomes a very strong and reliable buy level. In this precise scenario, if this crucial level is touched or reached, it can potentially react quite significantly, and if it decisively breaks through this important level, then you should definitely consider it as a clear and undeniable change of character. So this becomes a valid change of character, and remember, it's better for the change of character to also meet the valid condition. Here the close should be by the body, so in the change of character, usually for a downward move, two lows need to be broken, and for an upward move, if it happens, you can later use the POI tool to find its correct position. There's also the BOS chart. It might not have reached this area. You should consider this area as a sell zone. And if this sell doesn't work out and a single body breaks above it, at most this should happen within 2 candles. In that case, you have a change of character, and this change of character can lead to POI box, and watch the POI videos. With the POI box, you can use the box and within a POI zone, find a valid point to take a sell, or for continuation, find a point to take a buy. For continuing the move, I hope the tips related to finding valid BOS and change of characters help you to have a more complete perspective in using the POI box tool.